Must have hit a button or something. But welcome back to Stock Tricks with Nick. This is the Midweek Movers live stream. We'll go over what I just covered pretty quickly, but we're going to be going over a market recap. We got a nice bounce today. Unfortunately, we sold off kind of towards the end of the day, so a little bit of weakness there. We want to be cautious. We are going to be going over a watch list for the second half of the week. Always looking for the best, strongest stocks, so always looking for relative strength as the market's pulling back. We want to see stuff that are pulling back the least, pulling back on the least amount of volume, or just bucking the trend entirely and moving up as the rest of the market is pulling back down. So with that said, if you enjoyed the video, please leave a like, subscribe to the channel, and if you have any stock requests, drop them in the chat below. I'll get to all the stocks that we can get to in about an hour. So I already got a couple of stocks, Tesla, Facebook, HUT, Amazon, and the rest of those from StockTwits and Twitter. So if I don't get to a chart that you guys want to go over, drop it in the comments. All right, let me jump to the E-Trade chart. So quick look at the QQQs. We had that nasty day on Monday. So if you watch my video that I posted on Sunday about follow-through days, what I'm waiting for buying the dip, I'm waiting for a follow-through day to start buying some stocks in the leaders. Looked like we got that on Friday, or got a day one on Friday where we closed above the close on Thursday. So that's like our first day of our attempted rally. Unfortunately, that was invalidated because on Monday, we undercut the low of Friday's low, so now we need to set up a new day one. That's exactly what we got today. Today we closed 1.35% above the previous day's close, so that's good. That's our day one. Now, as long as we don't move under the low of today, we can start counting days. So if tomorrow and the next day we don't break under the low today, that's day two and day three, we can start looking for a day four follow-through day. And that's what I'm looking for to start building exposure in the market. Right now, I'm 100% cash. Today's rally, a couple concerning things. The leading stocks didn't act super well. Very little volume on the bounce, and you could see a higher upper wick on this. We sold off a little bit into the close. So a couple reasons to be cautious. We're still under the 50-day, the 20-day, the 8-day exponential moving average, still under this main volume shelf, and all the big volume days have come on down days so far. So do I see an edge in the market trading right now? No, I don't. I think your time's better off fixing your systems, fixing your stock tracking, going through a trading journal, all that good stuff, building a watch list of the leading stocks that are holding up well, but not over trading. So yeah, we have a lot of work to do to get through this volume shelf and some of the key moving averages before we get going. S&P 500, similar story, not as bad as the Qs, right in the main part of the volume shelf here, but still under the 8-day, the 20-day, and the 50-day. So let's check the IWO. This is the Russell's 2000 Growth ETF. This really paints the picture of what swing trading has been like in 2021. We had a really strong December to February move, 29% there. And since then, it's just pull back, bounce. Just how many months of this? 7 months, 8 months of just choppiness in the market. Really tough trading environment since February. You got to pick your spots and really manage your risk well. But on this, this is, I guess, even more concerning because we moved up towards the day, then flushed down, and now we're down 0.6 after hours under the main part of the volume shelf here. This looks like it could just roll over and really push to the downside. So with that, and let's check ARKK. Hey Amanda, hey Javy, how's it going? Similar kind of story to IWO. This had a 40% pullback, and now this is just dropping off. And the thing with buying the dip right here is if you buy the dip and it bounces up to this range, 10% or so, you're going to have all these people that are trapped at these higher prices trying to get out, and a lot of swing traders that are going to be very happy with a 10% gain after this mess right here. So there's going to be a large group of sellers selling into any 10% bounces that we get. So that's why it's almost better, well, it is better, at least for me, to be cautious, to be in cash, and to really let the market show its strength, have institutions come in, build up positions. You see kind of volume flipping to large volume up days versus large volume down days. Some breakouts happening, so we can then get aggressive. But for now, not super solid. Let me bring over. All right, so this was my all-star list of all-star stocks. Let's see if you can see them. We'll just go through these really quick. So AEHR, actually, let me jump back to this. So today, sorting this, you can see this is a new one that I put on the all-star list, NET Cloudflare. But we got a couple of these stocks. I will have to kind of update this list because we have a couple stocks under their 50-day simple moving average, Globe, DOCS, let's see here, what else? DLO. A couple of these leaders, Zim, the shipping industry is getting absolutely hammered right now. A couple of these stocks are really starting to show weakness, and it's time to be cautious, not time to be aggressive. All right, let's jump into some charts for stocks that are holding up the best that we want to keep an eye on. So AEHR is one of them. Let me jump over here using MarketSmith here. Accumulation distribution on this, A+, relative strength rating. Right now, relative strength rating is the #1 requirement that I'm looking for stocks. I want the strongest stocks that aren't already underwater, don't have a bunch of people trapped at higher prices. I want kind of blue skies ahead, right? So if the market is, if the market firms up and then breaks out to back towards its highs, these stocks that don't have any resistance up top, they're going to be the ones to really put the pressure on. So looking for relative strength ratings in the 90s for any of the stocks that I would be trading. AEHR, 99 relative strength. A+ accumulation distribution, meaning a bunch of the large volume days are coming on up days versus down days, where compared to the rest of the market, that is not the case recently. This did pop on earnings, and then we pulled back, filled the gap there, and now we're consolidating above the 8-day exponential moving average, which is important. Fund ownership, I mean, just kind of sticking around 20 funds. I bet that changes with this earnings pop, but let's jump to the other chart, get a better AEHR. So this is one that had a really nice pop, 260%. We consolidated, had a little flush under the lows, and then just another move, 200% taken off. Popped on earnings, like I said. Let's see. Pull back 29% to the 20-day simple moving average. That's this green line right here. And really holding great relative strength from that point. Good close on Monday. Really tough day on Monday in the market, and this closed green. Good sign of relative strength. Great close today, right at the high of the day, while the market pulled back a little bit into the close. Another sign of relative strength. So if this can tighten up a little bit, it's like trade sideways, flag out a little bit more, allow that 20-day simple moving average to continue to come up as support, this is definitely a stock that I will want to keep an eye on. AEHR. Next we have CDAY. So relative strength rating on this, a little bit lower, 81, but it's the setup that I like. It's still above a lot of the resistance on here, so I know I just said relative strength is the most important. As long as there's no like resistance up top, it's a stock that I want to take a look at. Really good group strength rating, 12 out of 197 in computer software right now, so A+ group strength rating. Lower on everything else on this one. Again, this is more of the pattern that I'm looking at than anything else. Fund ownership dropping a little bit the most recent quarter. Let's go CDAY. So here we have that nice kind of cup. Put in a shakeout and another shakeout on Monday, where we brought under the 8-day, under the 20-day simple moving average, under all of the previous lows in the pullback in this kind of like handle here. And then today we had a nice move up 1.16%. And you can see we're sitting on a volume shelf. So if we were underneath this in here, that's what I would want to avoid, because any pop into that move, and it's going to be hitting some sellers. But we've pulled back, and we actually found buyers at that area, at the 20-day, at the volume shelf. So that's why it's a stock that I'm going to be watching for. Nice, strong uptrend, 250, 28, all in the right order. This is CDAY. All right, next we have CELH, Celsius. Group strength A, it's 23rd out of 197. Within that group, it is the 11th stock on a composite rated out of 47. So, oh no, it just switched on me. Sorry about that. Second stock on a composite rating out of 17. Number 1 on a relative strength basis, 98 relative strength. Accumulation distribution lower here. I think it's just because of that recent kind of pullback day on higher volume. But let's take a look at the earnings. Last 4 quarters, year over year, 100%, 200%, 0, 150%. Sales up 80, 48, 78, 117. And then after-tax profit margin also increasing 13%, 5%, 1%, and 6%. Fund ownership on this, just a little bit of an increase in September, but a steady climb from last June, 122 to 381 this September. CELH, let's go to the other chart. So high to low in this pullback, only 14%. That's for a growth stock. The NASDAQ QQQs are down, what, 8% from high to low? So 14% is a little bit wider, but this is a more volatile stock. It's a growth stock. It's not a collection of stocks like the Qs are. But we pulled back to the 20-day, and now we're just kind of consolidating-ish around there, showing good relative strength. Nice high close, up 4.75% today. Good shakeout on Monday, and then closed pretty high compared to the low. Let's see, 3.7% off the low. Another good sign of relative strength. But right now, for a low-risk trader like myself, I want to keep stops 3%, 5% max, really. And you can see the average true range here. No, that's price relativity. Average true range, ATR, that measures the daily candles. That's increasing in size, meaning if I try to put a 3% stop loss on this, chances are I'll get stopped out just with a normal volatility. And then, so not saying that the chart's wrong, that the stock's wrong, anything like that, just normal volatility will shake me out. So I don't have an edge if I'm taking the trade with a 3% stop, anything like that. So for me to actually trade this profitably, and not just this one individual trade, but to be profitable on a number of different trades, I need volatility to decline. I need this price to tighten up even more, and ATR to actually come down instead of expanding. So while this is showing great relative strength, right now the market is just too volatile, and we're not seeing the right kind of trends volume-wise for it to make sense to be too aggressive right now. All right, let's go CRC. Just gonna go over the chart on this one because I put this on the breakout watch list going into the week. Really nice move up, 63% from here. I think I measured it in this video from the previous low, 80%. Since then, we pulled back 9.5%, and we're just kind of sitting right on that 20-day simple moving average. That's where we closed above today. Good volume on up days, lower volume on Monday's pullback, where we closed right on the 20-day again. This is one where, I mean, it's still high to low here, 5.5%, so tough to find a low-risk entry point, but CRC, great relative strength. And let me jump to, and this is oil and gas, right? CRC, come on. Oil and gas, yeah. So number 2 strongest group right now out of 197. So that's an A+ group strength rating, A+ accumulation distribution, 94 composite, and 97 relative strength. So that's why I'm looking at this one, CRC. Next we have DataDog, software and computer engineering. So that's a group strength rating of an A. It's got accumulation distribution on the lower end, B-, but composite rated 91, relative strength rating 92. It did a gap and then just kind of post earnings drift higher, and still really holding up quite well. The fund's ownership is increasing steadily over time. Let's see, group strength, 16th out of 111 on a composite rating and 12th out of 111 on a relative strength rating. Earnings per share growing pretty rapidly, 400%, 100%, 0, and then 80. Sales up 61, 56, 51, 67. So 4 quarters year over year, over 50% sales increase, very, very strong. And then after-tax profit margin up around 10 to 12% each of those quarters. Let's go to the chart here. And I see your guys' comments. Keep them coming. I'm just going to go through the rest of the watch list, and then we'll go through the comments and then the rest of the stocks that you guys want to see. All right, so Datadog, nice move today, 3.5%. Looks like it happened on lower volume, but we have that volume shelf to work with, the rising 50-day simple moving average. So some decent support on the lower end here. Ideally, we put in like a week where this just flags out, tightens up. You can see ATR is basically the highest it's ever been right now. So not good for low risk swing trading. But if you're just buying and holding for a while, this is a stock that's holding great relative strength. Let's see. Yeah, an aggressive entry point would be on this downtrend line, stop under the lows, still 5%. So, I mean, in normal times, when the market's working in your favor, 5% is fine because most of your stocks won't hit a 5% stop. They'll continue higher. But right now, we had a day one in the market where we closed above the previous day's close, but it's just day one of an attempted rally. And it came on lower volume, and leaders didn't act super well. So I'm being very cautious. I am still 100% cash right now. Not trying to tell you guys what to do, but that is where I'm holding. Next, we have DOCN. This was on my all-star list, and it's holding, might be my number one stock that I'm watching going into the next couple weeks. Group strength rating A, it's in the computer software. Accumulation distribution B+. Composite rating 79. I think that's just because, yeah, after-tax margin and earnings are still negative. Sales are increasing though, 24, 26, 29, 35. Relative strength 96. 7th strongest stock on a relative strength basis out of 111 in that group. And we have fund ownership increasing for DOCN. Yeah, going here. Yeah, this was a trade that I took off too early. I got a really nice entry on here, on this day. It checked back. And I think I sold my last bit like halfway through this day, up 25% or something. And then it just kept running, which is fine. I mean, 25%, that's awesome. Especially with the way the market was acting. You couldn't really tell it was going to go up another 25% or so. But now that it's pulling back, it's showing good relative strength. Continues to put in these long lower wicks, meaning every time it shakes under that 20-day simple moving average, buyers are stepping in. And it looks like volume is drying up as we go through that pullback, which is a nice sign. Let's see. Yeah, it did squat today, which is fine. It's still too early to buy stocks, in my opinion. But we have a nice pivot right through here. So if we get a couple days where it just kind of trades, and then breaks out, we have our possible entry point there. The only downside right now is where do you put your stop? Under the low of the day is 4.1%. Under the lows is 9.4. You're not doing that. So that's why I wanted to see a couple more days where this tightens up, but then we do have a clear pivot entry point for DOCN. Let's see. EVH. Yeah, this one's kind of speculative. It just went through a nice pop. Something that I want to keep my eye on because it's bucking the trend completely. A+ accumulation distribution. It's in a strong-ish group, B-, 82 out of 197. Fund ownership staying steady at 357. Did increase year over year, which is good. And 7 out of 34 on the composite rating in that group. Let's see. EVH, nope. Yeah, so tons of volume on this pop here. Definitely too early to take this trade, but it is completely bucking the trend, which is why I want to keep this on the watch list and share it today. Not much to say about it. I'm not going to be taking a trade just with a break over that because we're already 7.7% extended anyone who's holding this stock, who's also holding other stocks in the market that are getting hammered, are taking some profit from here to offset their P&L. Another reason why right now is just not a very profitable time or consistent time to be trading. Let's see. GOGO, kind of similar, had this nice pop on volume. Now we're going through a pullback. Let's see how it reacts with the 8-day exponential moving average. Kind of building a volume shelf above the price right now, so this might need some time, but something to put on your watch list. Got out, let's see, 62% on really heavy volume, something that was super frustrating to trade all of last year. So the fact that it's going now during the most frustrating market timing is no coincidence. Next we have LC Lending Club. This was on the breakout watch list a couple weeks ago, something that I traded through this area on this breakout day. Had a nice 2-day pivot right in here to get a lower entry point. Unfortunately, it pulled back, stopped me out at even with the rest of my trades. You can see previous resistance is now resistance again once we come back under there. We have the 50-day, the 8-day, and the 20-day all consolidating. So which side is going to win on this one? And that's why when I trade, I'm trying to trade the breakout, not a pull back, because I want buyers stepping in and showing that this is a stock in demand. This kind of squat today is setting up a nice pivot where we get a couple trading days the rest of the week trading sideways. Then we could use that high 29.27 as a possible entry point. The nice part about that is it's above the main part of the volume shelf here, so there is less resistance up top in this 10 to 12% move up here. So LC Lending Club, we'll take a quick look at the fundamentals of this. Group strength A, 22 out of 197. Within that group, it has the highest relative strength rating of a 99, 22nd out of 55 on a composite rating. That's because it has had negative sales, negative earnings, negative profit up until this most recent quarter, where it had 115% earnings per share growth, 416% sales, and 4% after-tax profit margin. Fund ownership on this also is increasing. Last June, I guess we have September data now. So last September 208, this September 319, up about 50% there. LC. All right, got a couple more. PAG, Penske Automotive Group. This was a beautiful cup handle, basically a VCP action right through here, broke out on heavy volume, and now we're just checking back and consolidating. So possible pullback buy on this one. It's got an accumulation distribution rating of A-, composite rating of 98, relative strength rating of 94. Fund ownership on this is steadily increasing. Let's see, last September 346, now 429. Inside that group, it's second on a relative strength basis out of 26 stocks, fourth on a composite basis. This does have really strong earnings per share growth, 99, 99, 240, 698. Sales are increasing, went from 0, -1 to +15 and +91. And after-tax profit margins about 3% to 5% each of those last 4 quarters. Let's check for an entry point. So here you have that cup, another pullback. So let's kind of measure this. VCP, volatility contraction pattern, 22%. I think actually Minervini did take this trade too. 9%, 6%. It gets all quiet for 3 days after a nice pop right there. Volume at its lightest, boom, breakout. And a nice 20% move. I mean, this is exactly the chart pattern that you guys are looking for to trade right now. Big cup, tighter, tighter, volume drying up, and then big volume coming through the pivot point. Now we pulled back, had a good shakeout day on Friday, consolidated Monday, consolidated today, little shakeout. This is one where you have a little bit of a kind of 3-day pivot, but I'm super cautious in this market. So this is like, basically I have a list of stocks that I'm going to be checking saying like, oh, did these break to the downside? Oh, did these break to the upside? If more of these stocks from my list break to the upside, then I start to get more confident in the market, get more confident in the rally. If I'm looking at my list and everything's breaking to the downside, then I'm just continuing to sit in cash. So this is PAG, Penske Automotive Group. Let's see. Next we have the last two that I'm going to be covering. We're both on the breakout watch list, so we'll go over them really quick. TROX, group strength A, accumulation distribution B+, composite rating 99, relative strength rating 95, number 1 out of 46 in the group on a composite rated, over 1,000% earnings per share growth year over year, 60% sales, 11% or 10% after tax margin, and fund ownership increasing for TROX. This was one, we have that giant kind of cup, put in a pullback, 9% or so, another pullback, 5%, and now we continue to respect that 8-day exponential moving average, this purple, pink line, whatever it is, consolidating there above the main part of the volume shelf. Looked like it was getting out today, squatted, that's the market right now. And that's why any stocks that are going to be breaking out, chances are people are going to be taking some profit from them to book that against the losses that they've had the last couple of days. So you're likely to see any stocks that do break out start to pull back and get chopped up for a while. Of course, there are going to be a few, but trading is a game. Why can't I get that? Trading is a game of probabilities. Unless you nail the exactly 1 to 5 stocks that are breaking out on good volume that are holding those moves, you're not going to be profitable in this market. So that's why I'm taking a step back, 100% cash. I would rather miss out on 5 stocks that break out right now than try to trade against the trend of the overall market. But TROX is one of those checklist stocks that I want to see break out. I want to see prove me wrong and just go, because that gives me more confidence in the market. And then the last one I have is Upstart, UPST. This has been the true market leader of 2021. Had this massive 170% move. Traded it a couple times in here, never for too large of a gain. Had like, 15% move or something on that pivot. Pulled back again, gave me another entry. I traded the last bit really nicely in here for the 24%. Got out close to the top. But this is the Tesla of 2020. So this is what I want to be watching, because if this holds up and then starts breaking out, then I'm getting back into the market and things are looking good. Right now, pulled back 19% from the highs. So right now, it's setting up for a high tide flag. High tide flags are 90% or more, stocks that break out 90% or more in 8 weeks or less, and then pull back within 25% of the high. 19% qualifies it for that. So what I'm looking for, it looks like we put in a low on Monday, which, I mean, this compared to the QQQ on Monday showed great relative strength. This was down 3%. QQQs were down, 2.4? But this is a hyper growth stock, so the fact that this was only down 3% is a really good sign. And then today had higher highs, higher lows, but that upper wick shows people were taking profits right at that 8-day exponential moving average, taking profits just in general in the market on the bounce. So do we just have to go through some more consolidation? That's fine by me, but this is a name that I need to be kind of in tune with. UPST. All right, take a look at Facebook. Yeah, there's a lot of things going on with Facebook, with the whistleblower coming out. I didn't watch the interview, so I don't know exactly what they said. But then they went down. All of their apps went down yesterday, and everyone's like, "Oh my God, Facebook was down 5% because they were like they went down for 5 hours." Maybe a little bit, but it was the general market that was down. So it wasn't just because the site was down. But I mean, obviously that's not a good sign for them. So down big on heavy volume, had an inside candle today on lighter volume, although pretty big volume, but still lighter. We got this shorter term volume shelf right here on the bounce. No, this is not financial advice, Ryan. So with this, we're under the 50-day, under the 20, under the 8. Not a stock that I want to be buying. There's stocks like Upstart that are above key moving averages, like TROX, like Penske. Not like Facebook right now. This isn't a downtrend. We're selling this down and doing so on high volume. So it's institutions selling, not just me and you. Is it institutions getting back today? Maybe a couple, but Not something that I want to get aggressive on. I would get aggressive on stocks that are in good bases breaking out on heavy volume, not something that's trying to bounce off a low. Let's see, Root. This is the first time I'm looking at this chart, but kind of the same story. Why buy this stock when you can buy a stock that's already in an uptrend, already showing strength? Like, I'm a swing trader, so I'm looking for the strongest stocks that are going to get stronger. I'm not a long-term investor. I'm against Root as a business, but that's just because I work for a competitor. But I wouldn't want to own whatever the 4 letters are here that make up the ticker. I wouldn't want to own anything under the 200-day simple moving average. Wouldn't want to own anything under the 50-day moving average or the volume shelf. There's a reason why it pushed down this low. No one wanted this stock. So why get a stock that no one wants when you can get a stock like Upstart that everyone wants to get in and is just going through a normal pullback right now with the market? So that's Root. Let's PED. Yeah, so stocks under $5, I don't trade. Institutions aren't likely to pick them up. Let me check this. And what did you say about it? It's debt-free, 30 million cash. PED. So it is an oil and gas. So my argument would be, okay, you want to get in an oil and gas stock, then look at the stocks in the industry, sort it by relative strength right here, and then start going after these stocks. MTDR, nice breakout, over $5, good volume on that move. Wait for it to kind of put in a pullback, pivot point, and then buy that breakout. CPE, kind of already getting going there. REI, it's under 4. So yeah, the problem with the oil and gas, they're already extended right now, and they're the only thing working. So my assumption is people are going to be taking profits in that group, which will create a short-term pullback, which then sets up the trade in a week or so. So it's good to have these on your watch list, but right now they're just a little extended in a weaker market right now. But oil and gas is, like Market Smith says, the second strongest group out of 197. So I want to be looking in that group, but I don't want to be looking at stocks under $5. All right, let's see. MGA. Auto and trucking, that's a weaker group. Let's see. Accumulation distribution, D-, composite rating 64. It does look like it's going through a turnaround right here. Earnings per share up 38, 101, 116, 182. So acceleration in earnings per share, good to see. Acceleration in sales, -2, +12, +18, +110. And after-tax profit margin, positive there. So kind of a turnaround story, showing good relative strength this last couple weeks, but 59. There's a lot of people trapped at these higher prices. So if we do get a bounce, who's going to be selling in this group? It's under the 50-day, under the 200-day simple moving average. As a swing trader, that's not what I'm going to be looking for. But this could be a turnaround situation where it is putting in a low and then we break out to a new high. That's fine. It's just not a trade that I would be looking for under that 50 and 200-day. It just creates too much selling pressure above. If we go to the other chart with the volume profile, let's check that MGA. Yeah, so there's just a ton of volume that this is going to have to work through. Not saying it can't, right? There's no absolutes in trading, but trading is a game of probabilities. The probability on this side, on this trade, is not on your side at this point. So you could roll those dice, but 5 of those numbers are going to be working against you. So not a trade that I would take, but that's fine. Plenty of ways to make money in the market. If you trade like reverses in RSI, relative strength, anything like that, and that's what you focus on and that's what you're good at, you can make money doing that. I can't. I'm bad at that. I'm terrible at that. What I'm good at is buying like the market leaders and trying to manage risk there. INMD, yeah, this one I've had on my watch list for a while because it's been so strong. 250, 28, all in the right order. And then just complete malfunction. 2 days down 25%. I didn't check the news or anything on this because I didn't have a position, but if you want to drop the news in there in the chat, I'll review that. But a lot of these like full big red candles on big volume, this is going to have to like flag out for a while. It's good you have this volume shelf right here, right? So people are buying right at that area. We're finding support there. Could you buy there and put your stop under the lows, 2.7% or so? Yeah, you could do that. But this type of volume coming out of the stock, I wonder who's just going to jump right back into it. But I mean, strong stock. It's just that first pullback with the market being this weak isn't something that I would try to trade. If it did this when the market was uptrending, then let's see, it split. Okay. If it did that while the market was uptrending and holding, like pushing new grounds, then maybe this is kind of an aggressive pullback that I want to get in on a market leader that just went through a pullback. But right now, better be safe than sorry. All right, let's see. Matic. MATIC. Is that a stock, Ryan? Or is that a crypto? SDC. That is a stock. All right, yeah, Smile Direct. This is popular on like the Wall Street bets and stuff. I think it's pretty heavily shorted, but probably for good reason. You got the 200-day, the 50-day. It did pop a little bit today, 15%. Good volume, but you have a ton of volume shelf to work through. I'm not trying to buy that. Let's check the fundamentals on it though. SDC. Sales are increasing, finally starting to turn around that, but after-tax profit margins getting worse and worse, earnings still negative. One of the weakest stocks in that group. It's a decent group, medical supplies though. So let's check the top stocks in that group. Huh. That's not a bad setup. Yeah, weak relative strength though. Yeah, so SDC, not something that I'm super thrilled about. Good day today, but relative strength rating 5, under the 200-day, under the 50-day. And the market is just terrible right now. Ryan holding it, yes. All right, so let's get to the rest of the stocks that I had on Twitter and StockTwits that were requested. We got Tesla. That was on the breakout watch list, I think maybe this week too. It's just been a large liquid leader that's holding up pretty well. Continues to make higher highs and then higher lows, even while the market is really pushing lower. So this has a relative strength rating of 86 just because it kind of started so high at the beginning of the year and then went through a nice, this is a quality base. Like this is what you're really looking for in one of these pullbacks. It pulled back 40% from high to low, which after the 1,000% or whatever move it did, 40% is not bad. It's pretty constructive. Like you wouldn't want to hold through that. You would want to sell as it broke the 50-day or something on heavier volume. But now that it has gone through that consolidation, it's above the 200, above the 50. You got the 20 and the 8, all in the right order on this one. So definitely something that I'm looking for. Good volume on Monday. Came out after during the weekend that they beat on their what was it? Their deliveries or car manufacturers. I forget which one. But good news over the weekend. That's why it started up, then kind of fell with the rest of the market, but still closed positive on Monday. Tough Monday, and then today, which is weird. It's kind of flip-flopping with the market, basically flat on a day where the rest of the market was really good. But accumulation distribution on this, really strong, A-. Composite rating, 97. Relative strength, we just went over that. Earnings per share on Tesla continues to act really well. 105, 95, 304, 230. Sales, 39, 46, 74, 98. So we have acceleration of sales. After-tax profit margins, about 10% each of those last quarters, year over year. And then in that group, it's number 1 on a composite rated and number 5 on a relative strength rated basis. Jumping to the chart. Tesla just CCRN. Yeah, Tyler. Yeah, we'll cover that in a second. That's one that I had on the watch list, just didn't quite cover it today. All right, so yeah, Tesla continues to buck the trend. I would like for this to consolidate and then just, like, let's pull back to the 20-day, let the market kind of pull back again, just set everything up, and then break over this range. That would be the only possible buy point that I'm looking at. But the fact that it's holding up so well is something that is exciting because Tesla was the leader of 2020. So it's good that that's back. Already covered Facebook, HUT, HUT mining, giant cup, giant handle, boom, breakout on heavy volume. I mean, this is, that's completely bucking the trend. I think does this have to do with crypto? Let's check. HUT, financial services, cryptocurrency. Yeah, so anything in crypto right now, that's where the money's flowing in because everything else in the stock market has been terrible. So the fact that this is breaking out, let's check MARA as well. MARA, I assume that's up, yep. Riot. Oh, man. Okay, so good example, Riot versus MARA, MARA. Why buy Riot, a stock that's under the 50, under the 20, under the 200, when you can buy MARA, which is now breaking above all those key moving averages? Always focus on the strongest out of two similar stocks. So that was, I guess I didn't really go over that. HUT, getting out on good volume. I'm not buying at this range. Hopefully it puts in another kind of pullback to here and then gets going again. Then you could trade that. But great relative strength. Again, crypto is where it's at right now. Check Amazon. Under the 200-day simple moving average. Really selling off on heavy volume. We had a warning sign here when it gapped down. A little bear flag into the 50-day simple moving average. Good area to short the stock right there. When you get those low volume bounces after a heavy volume sell-off, right back to a 50-day moving average. I don't short much, but that's like the bread and butter of when to short a stock. Because we got a 6.5% move down from there. And now we're back at last July. So a year plus later, and Amazon has not done anything. PRFT, this one's from Javy, a great person to follow on Twitter and StockTwits. Yeah, this is one nice move up, 200-day, 50-day, 28, doing all the right things there. Quick little shakeout under the 20-day, get going again, another 12%, holding tight. This is awesome. I don't know why this didn't show up on my scan today. I need to take a look at that, but let's see, what's the volume on this? 280, yeah. Good one to point out, Javy. Great job. Definitely something that I'll be adding to my watch list. Where's my pen? PRFT, excuse me. Let's check the fundamentals on that. PRFT. A+ group strength, computer tech and services. B- on accumulation distribution, 99 relative strength. Or 99 composite, 98 relative strength, great earnings, great sales, great after-tax margin, number 1 in the group, fund ownership increasing, checking all the boxes. Yeah, this is something I definitely need to put on my watch list. Nice. Okay, ARCB, nice cup here, good earnings per share growth, 20, 73, 181, 194. Acceleration of earnings, acceleration of sales, 114, 18, 51, and then after-tax profit margin, slight increases, composite rating of 99, accumulation distribution of A, relative strength 96, fund ownership steadily increasing, and number 1 out of 19 stocks in the group. Transportation trucking, good. Yeah, so I mean, this is something that I just needed to put in the handle, right? Pull back, tighten up a little bit, get a lower risk entry point in, but showing great relative strength, completely bucking the trend of the market. All the big volume days are coming on up days. ARCB, another great one to put on just a general watch list. Not ready yet, but yeah, definitely strong. And the last one I had from the previous FULL, that looks super weird on this chart because I have it not logarithmic, so I will put it here. Yeah, nice cup, starting a 2-day pullback, 8%. Let that 8-day exponential moving average come up, but very, very little volume on the pullback. Heavy volume on the breakout. What do they do? Leisure and gaming. Develops, manages, operates, and invests in casino and related hospitality. Full house. Nice. Yeah, another good name that might need a couple days, at least to pull back to the 8-day. I'm not taking anything that doesn't test the 8-day, but strong stock in a weak market. Great job. All right, what else did you guys want to see? Anyone? CCRN. Yeah, so this is one that Leif Serede mentioned on Twitter today. One that I traded, where was it? I think it was this day. It bounced, pulled back, and then got going. No. Here we go. It was this pivot right through here. Yeah, I took this trade, sold some of the strength, and then immediately got stopped out on the rest. And it has this nice shakeout, nice shakeout, nice shakeout. So this is a stock that really likes to frustrate a lot of traders because whenever it looks like it's setting up, and it does tend to get out on good volume, then it just comes right back, shakes out the weaker hands, and then sets up again. Kind of what we saw today, got out of that area, broke into new highs, and then squatted. So if we can get just like 1 or 2 days where it tightens up underneath here, then we can use like the previous day's high and today's close as a possible buy point. Just a lower entry point, just so we can keep our stop under like the 20-day moving average, and that's only 4%. But this is something that I have on my kind of general watch list of like 25, 30 stocks, just not on one of the ones that I decided to share today, but it was on that cutting block because great relative strength, good volume on the way out on these days, a lot of good shakeouts. Can it frustrate traders one more time, pull back, shake out again before getting going? That's what I'm looking for, but something that I am watching, CCRN. All right, we're gonna give the chat maybe a minute. Go ahead and put in your last request for stocks. I'll do a couple kind of video promos. I did put out, here I'll jump to the main camera. I did put out a video with my friend Dan. It's my first interview or first episode of a series called Money Talks, where I'll be interviewing friends, basically anyone who I can interview that has a good money story. My college teammate Dan was in student debt, like most everyone out of college, and he decided to do something about it. He cut down $33,000 of student debt in around 3 years, but within the last 6 months, he took down $18,000 of student debt. $18,000 in the last 6 months. He's debt-free. Now he's building up his net worth there. So check out that video. That's linked in my Twitter account, StockTrickNick there. And then I also put out a video on Sunday about follow-through days. That's what I'm going to be looking for in this market. We put in a day one where the stocks today, S&P 500 and NASDAQ, closed above yesterday's close. So if we can get day 2 and day 3 where we don't undercut today's lows, then that's day 2 and day 3 of a potential rally. Days 4 onward, we can look for what's called a follow-through day, where we increase by 1% or more with more volume than the previous day. That usually marks the official start of a new uptrend. So not just a rally attempt, but the start of a new uptrend, and that's when you want to start building exposure in the leading stocks in the market. But go ahead and check out that video. A lot of good information there. That one's only 12 minutes long. I've been trying to shorten down these videos for everyone. But I don't see any stocks in the chat, so thank you guys so much for showing up. If you enjoyed the video, leave a like, subscribe to my channel,